All right, start it all over again. This is like the second or third time I've started this now. Um, and good afternoon, everybody. Today is Wednesday, the 16th day of April, 2025. It is now 3:05, so I'll go to 4:05 today. All right. What I was just saying a minute ago, if you haven't taken a free trial, let's do that part really quick. Go here to tvtrades.com, sign up for the free trial here. Click on any one of these orange things. It's going to be down to the bottom, $25 a week after the free 3-day trial. Sometimes it's a 4-day trial, sometimes a 5-day trial. Right now it's a 3-day trial. Um, $25 a week after, or $90 a month, or $9.97 a year. All right, sign up for the trial. You do have to get TradingView charts to be able to use our stuff. So get TradingView charts too if you don't have that. Um, let's see. That's it. One of the other things that I was telling you is there's also this Target View Trades out here, and on Target View Trades is where you will always be able to sign up for the Wednesday meeting here. This is today's meeting. Next week's meeting will be here in a little while today. You'll be able to sign up for next week's meeting right here. And the meetings that we do are put out here. If you go to more and go to upcoming past webinars, this was last week's meeting. Today's meeting will be put here, and this one will be put down here. All the ones that we've done in the past are down here. Okay, so you can go look at the history of anything that you want to look at back there. All right, so today, the stuff that I want to talk about today is it's stuff that I talk about all the time, but I want you guys to actually see it in the markets when it's happening, setting targets and stops. Now, I have things set when I'm using range bars. I always use the same. I have brackets set up to begin with. All right, but setting up a bracket is just one part of it. Is that chart the updated beta try chart? This one down here, I don't think that is. I don't know. Let's see. No, it is not. I don't think. What I want to talk about today isn't really about new stuff. It's more about stuff that's there that you may or may not pay attention to. All right. So let me just minimize this. Let's just look at this with no indicators at all on it. Okay. Now, what I was talking about was setting targets and stops. All right. Now, inside in here, okay, if you go to targetviewtrades.com, again, in here, if you go down to the bottom where it says risk management, right here, you can go there and see how I have this set up. So I have brackets set for every type of range bar that I use. Every one of the range bar sizes that I typically use, I have a stop and a target set up for that preset. All right. I know I'm just jumping right into things here, aren't I? A few weeks back, I introduced a red line that basically stayed in the middle of the trigger chart for the purpose of eliminating the flat spots, high or low. That would cause a stop. Oh, why is that missing from your charts? Okay, I'll get into that in a few minutes. Okay. I don't have anything on my charts right now. Yeah, don't get distracted. I'm trying. All right. So, I have the brackets all preset, right? I have these brackets all preset, and I went over something, a couple of times in past meetings. I went over something about if if the markets are really volatile and you're not able to move your stop and manage your risk effectively, you can go to a larger time frame like this and do it within a single bar. You can manage your risk within a single bar, and for that, you just have to have a good entry, right? You have to have an entry that's going to be like near the top of the bar if you're shorting, or an entry near the bottom of the bar if you're going long. That's basically what you have to have for that, all right? So in a single bar, we'll say like this bar here is a 100 range bar. If you had like a 40 by 60 bracket and you went short right here, you'd hit your 60 ticks before you got to the bottom of the bar, right? Before that bar closed out, and your 40 tick stop would be up here somewhere. So if the markets are really fast, really volatile, or if you just like trading that way, some of you guys, since I introduced it to you guys, some of you guys do like trading that way. You just do it all within a single bar. Like any one of these bars right here. If you had a 40 by 60 bracket on any one of those bars, you would have gotten 60 ticks on every one of those bars right there. All right. So you just got to have a system, which is the TV trade system, that gives you an entry that's going to be near the top or near the bottom of the bar, which is, again, is the TV trade system. That's one way to handle it, right? So you can have your targets and stops preset. It's in here, preset like that. Again, to get to this risk management page, it's at targetviewtrades.com. Targetviewtrades.com. I don't have it on this TV trades page. The targetviewtrades.com page has a lot more of the information. This is more of a thing to just introduce you to what we've done and what we do and all that. But this is where you get into the detail. targetviewtrades.com. If you haven't been to that page, go check it out. There's a lot of videos in here about things that we've done. And the risk management stuff is right here. Okay, now, let me stop and breathe for a second. I feel like I just spoke for 5 minutes without taking a breath. So these are targets and stops, right? Now, when you're in here trading and the market's doing what the market's doing, right? Now on the ES this week, I switched to a 19 range. I actually did it at the end of last week. I switched to a 19 range for the ES because it's been so volatile and because the 19 range has given us some really good setups and I'm making really good money with it. Okay, normally I would do the ES on a 7 range. Now that works really well too, but let's just step away from the 100 range stuff where you do it all within a bar, all right? And look at the markets. And just let me move this up a little bit here so I can draw some. Okay. Now, almost every meeting you see me talking about this, right? You hear me talking about this. That the markets go up and down like that, right? Almost every meeting I talk about that because it's always the same. So I know you guys want mechanical systems and that's fine. That's perfect. What I just told you about, entering, if you have an indication that says to get short, if you have a 100 tick range bar, that's 100 ticks in between there, and there you have something that says to get short at the top of the bar, and you have a 60 tick target on it, you'll hit your 60 ticks right here before you finish that bar out. Right? You only got to do that once or twice a day, and you'll be good. So you don't have to worry about picking out your targets and stops. They're already done for you. All you have to do is get the indication, take the trade, and be done. And I don't want to go too far down this road, but I'll go down it just a little bit. Let me slow down and sort of put these pieces together in my mind for you. One of the things that I get asked a lot is how much of a daily loss should I take before I quit trading, right? I mean, practically everybody in here has asked me that question at one point or another. How much should I lose before I quit trading during the day? Because you see me doing it and I make it look easy, and I don't quit when I get down. Because I've been doing this for a long time and I have confidence that I'm going to get back up, and I know that I'm going to get back up. I don't end days negative. But that's me, and I've been doing this for a long time. If you're new and you're new to trading and you're down, $500 on the day, and you have, a $3,000 account, that's a significant amount of your account. And you're going to want to stop trading before you're down $700 or $1,000, and then you're saying, oh man, this doesn't work for me. That's a question that I get asked a lot. So this type of trading right here, the targets and stops within a single bar, that is one way to answer that question for you. Simply answer that question for you. Okay? If you are in a market where you put that on, you could have a limit, a daily limit to yourself. I'm only going to take 2 of those a day, and if I stop out twice on those, I'm going to stop trading. It's not even really a dollar amount. It's that you're going to trade this way here. We're going to try to get it all inside a single bar. And if you get 2 of them in a row, you stop trading. If you lose 2 of them in a row, or you lose 2 of them net, you stop trading. It can be as simple as that. You're going to stop trading until you're up 2 or you're down 2. And that way, you don't run into that thing where, I got my 10 days in a row, and then I had a $500 down day that wiped out 3 days worth of profits. You don't have that sort of thing. That is one way to resolve that. Does that make sense? You use a 15 range for the S all the time. That's fine. If you use a 15 range for the S all the time, this could work for you within a 15 range if you wanted to. You have like a 5x10, something like that. All right, something like that for your bracket, a 5x10. And if you get into the trade and you get 2 of them that are profitable, then that's it. So how would you do this? Okay, well let's look at an example here. Now I fixed this thing all up in the morning session. I didn't do it for this session. Let's do this. Let's highlight that and highlight that, and we'll go in here and highlight that. Okay, get all the things on one of them. So all the things that I like to use are right here. Okay. And actually, you know what? I'll do one more thing. We'll highlight that. The same one. There, now everything's in the same menu. That's perfect. Okay. You know, I've been doing this for 20 years and I'm still figuring crap out. Anyway, what I'm talking about is like, let's go to a 100 range bar. We're in a 100 range bar. Let's say the open of this bar was right here. I mean, let's not just say. Let's just look at where the open of this bar exactly was. All right. It was right here. So the open was at 68.50. Now, if I said I'm going to have a 40 by 60 bracket on this, 40 is 8 points above. 8 points above. So my stop on this bar would be up at 76, 76.50 is where my stop would be. It'd be a little bit above where the high of the bar was. All right, 76.50. And my target, if I had a 60 tick target, my target would be 10 ticks down. So my 10 points down. So my target would be 58.50. It already hit the target. All right, so if I had the 60 by 40 bracket on this particular bar, then my stop would have been up here and it would have already hit the target on the way down. All right, I'm sorry, it would have been 15 points. Sorry, it still would have hit the target on the way down. It would have been 15 points. From the open, it would have been 15. 53.50 is where the target would have been. So it would have gotten really close to the target. All right, so what that means, let's see what it is. Let me stretch it out. Okay, and click on this just to make sure I got the right thing going here. Here we go. So if I had something, some indication telling me to get short on the open of this bar, you put a bracket on. Let me get something out here. Hang on. What market is this? The ES. Okay. Let me go to ES. I'm going to put it in demo right now. Okay. We'll go to demo. And hang on. Let me put this thing on here. Okay. Oh, that's a micro. Well, it doesn't really matter. I guess. Hang on, it does matter. Let me get out of that and go to demo on the regular one because we're looking at the regular one. Here it is. Okay, and let's just look at this. All right. So here's a bracket. Here's a demo bracket. Okay, I think. Let me just make sure. Yes, here's a demo bracket. Now, oops, I didn't mean to get long on that. Let me just let me flatten and cancel on this. Look, I made 7.5 points. All right. So I don't want to have this bracket. It's a 100 range bar. So what you would do is set up a bracket like this. You go to targets and you set up a 100 range bar bracket. Let's say we have a 59 target. So you're going to have a 15 point target. I guess you could put the target right at 60. Okay, a 60 tick target. And your stop is going to be not 40, but let's do 30. It's going to be divisible by 4. I guess, yeah, I guess you could do 40. That's right. It's 10 points. That's fine. So you have a 60 by 40 bracket. Okay, and to do this, you would have to go here to main and then go to this and do save configuration and do. Oh, I already have one. Look, I already have one. I guess I don't need to do this. Okay, let me hit cancel on this and I'll just go to that one. I already have one right there. 100 range, 60 by 40. It's already done. Okay, 40 tick stop, 60 tick target. All right, so what you would do is at the open of this bar right here, you would have just gone short. If you had an indication that tells you to go short, then you would just sell short right here, right? It's already got a target of 60 ticks. It's got a stop of 40 ticks. So you just go there, and within this bar, you know you're either going to get the 60 ticks or you're going to get stopped out with 40 ticks. Okay, you know that that's going to happen within this bar. So you just put the trade on, and you don't have to do anything. Just put it on, accept the risk, and let it do its thing. You're either going to stomp out minus 40 or you're going to get plus 60. That's all you have to do. The question was, so could I explain how to do this? So like right here at the open of the bar, I could have put a trade on there and gotten in right at the open at 68.75. All right, 68.75 is the open. You see right over here. I could have gotten in right at the open. It's 68.50 actually. I could have gotten in right at the open at 68.50, and put the trade on. And right now I'd be looking for it to get to 40 ticks, not 40 ticks, 60 ticks in profit. So 15 points in profit. If I got in right there at the open which was 68.50. Then 15 points below that would be 53.50 is what I'd be looking for. So the bottom of this bar so far is only going down to 56.50. So it hasn't gone quite 15 points into profit or 60 ticks, but it's getting there. And that's what I would do. That's all you have to do. All right, then you don't have to worry about managing it. All right. And the question was, do we have a signal to go down or up or following the bar close? Hang on. Yeah, just set it and forget it, basically, yeah. Or following the bar color and close. There's no signal on this one, all right? This is not a valid trade. I'm just saying, if you did have a valid trade that said to go short, but there's no signal right here. But you just put the trade on. If you have the proper bracket on, just put the trade on and let it do its thing. Now, that is one way to deal with the really volatile markets. Now, the way that I dealt with it, because some of you guys are not really good with moving your stops around quickly and things, when they get going really, really fast. I mean, I'm the same way with some markets. Like this morning with the NQ, I traded the NQ 4 times today, and I stopped trading it because it was moving too fast for me. I'll show you the 4 trades that I took, but I stopped trading it because it was moving too fast. But for anybody that has trouble managing their stop, this sort of thing, doing it within a single bar is something that anybody can do. You just got to set up your bracket. And look, I'll go through setting up a bracket again. To create a bracket, any bracket, all you have to do, this is with Sierra charts. So those of you guys are using Sierra charts. This is with Sierra charts. Okay. You just go here, you choose something that you've already got. It's fine. We'll start out with this 9 range, 15 by 25. Then change it to what you want it to be, right? Change your target. Let's say I want to do 150 range. If I was going to do 150 range, I'd want to have a 200 tick target. All right. A 200 tick target and a 175 stop. All right. Now, I put those parameters in here, but I don't want to actually change my 9 range. So I got to go to the M, which is menu, then do save configuration. And then I'll call this a 150 range with a 175 by 200. Oops, I meant 200 by 200. 175 stop by 200 target. All right, I hit save on this, and now if I go in here, I can go to 150 range, 175 by 200. If I go to targets, it's got my target and my stop already set. You see what I mean? That's how you set up. That's how you set up a bracket on Sierra charts. I just went through the whole thing. You got to remember to go back here to main, go to the M, which is menu, go to save configuration and save the configuration. Give it a name and make it meaningful. Okay, because what you put in here, what you show right here, is what's going to show up here. Okay. So what I was describing to you here, this is for a 100 range bar. This is not the 150 range. This is for a 100 range. The 100 range, I said a 40 by 60 bracket. And now you can use that 40 by 60 bracket, whether you're trying to do it within a bar or not. You can use a 40 by 60 bracket on a 100 range. Now, usually when I trade in the mornings, for instance, you can see the brackets here. Like for a 19 range, my stop is bigger than the bar size. It's usually like a bar and a half bigger. All right, that's usually what it is. But if you're going to do it within a bar, then it has to have the total number of ticks between your target and stop has to equal the range size or less. If you're going to do it within a bar. Do you understand that? Okay. Bart, you're in here, right? Let me just make sure I just saw your text message from earlier. You couldn't get in because I didn't have it open. Actually, Bart's not in here. Okay. Let me say try again. Sean, are you in here? And I'm just seeing all my text messages that are coming in right now. Sean's not in here either. Get in the webinar now if you can from target view. If you can. Hang on. I know I'm getting distracted. All right. That's good enough. So that is how you set up a bracket. Now we would have just hit the target right there, right? 53.50 is what we need to hit. What's the low on this right now? Is it 52.75? So if we would have done that 40 by 60 bracket on this bar right here, you would have just gotten 60 ticks. If you'd done that bar, you would have gotten it. If you'd done that bar, you would have gotten it. If you'd done that bar, you would have gotten it. Now, I don't know if we had a trade set up there or not. If I move this over here and I put this on down here, using this right here, we didn't have a trade set up, okay? There was not a trade set up there using that. The last trade set up using the trigger, there's two different types of trades you could have done with this, okay? You could have done one here being an aggressive short and one here being a conservative short. You would have been entering right there on one and right there on the next one. All right, those are the two different types of trades you could have done using the trigger. Now, let me first show something to all you guys. This is not the password anymore. All right, this password works right now because I didn't update this one. If you hover over it, you see that little purple circle like that? That means there's an update available. If I click on that and you go to check what's new, and you click on that, it's going to come down here in the bottom. It's going to say I changed the password 2 days ago. All right, I didn't update this one, so the old password in there is still working. Everybody who is an active partner or everybody who's on the trial got emailed the new password. All right, the new password is in your email. Some of you got it 3 times. Some of you just got it twice, but it's in your email. Okay. So this isn't the new trigger, but let me just put one thing on here, and I'll show you kind of what I've been doing in the room in the morning. All right. With the market being as volatile it is, I've only been doing conservative trades, right? So the conservative trades are not the aggressive trades where I'm looking for the divergence and stuff like that down here. The conservative trades, you're just using the trigger, and for what we're doing in here, you put TV trades on and use the background color. Okay, so if the background color is red, you're looking for shorting opportunities. If it's blue, you're looking for buying opportunities. Now, pay attention to this part. There's 2 different types of trades that I'm doing. This morning I did conservative trades and aggressive trades. I didn't do aggressive trades. Now, there's 3 different levels of trades, really. There's one that's really aggressive where I trade in both directions no matter what the trend is. Then there's trading with the trend. If I'm trading with the trend, then I'm going with the background colors. Okay, I'm going with the background colors up here. And the background colors. If the background color is red, then you're only looking for shorts. The aggressive way is if it goes into the overbought like this, then you sell the open of the next bar. The conservative way, let's just get rid of something down here. We have too many of these. The conservative way is you wait for it to come out of the overbought like this. It comes out of the overbought and then you sell. All right, that's conservative way. Now, when to use which one, right? If you get into chop like this, then the aggressive works better. If you get out of the chop and you start having long leg lengths, then the conservative works better. Now this, Larry, you had asked this a little while ago. The conservative happens after the flat spots. All right, the conservative happens after the flat spots. So if you have long leg lengths, when you have a long leg length up, it's over here. When you have a long leg length up, you're likely going to have a longer leg length back because the price should retrace 50% of the way back, right? So that's what you should get. And if you're going to get that, then you're going to get the flat spot down here at the bottom. If you have a long leg length on the retracement, you're going to get a flat spot, in this case right here down at the bottom, okay? In this case, oops, I didn't mean to do that. I meant to do this. Delete that guy. Like this right here. When it has a long leg length down, you're going to have a flat spot at the bottom. If you're being aggressive, that's what's going to stop you out. right? That's what's going to stop you out. So even if you put the right password in here, and you have your optimum trigger on, when you get up here, it's saying to sell the open of the next bar. That's what it's saying. And this would have worked out okay. If you did sell the open of the next bar, that would have worked out okay. And it's saying right here to buy the open of the next bar. Okay, and that would have worked out okay too. But what I'm suggesting to you is that these are short leg lengths. So it's going to work when you have short leg lengths. But when you have long leg lengths, like this right here, that's where you're going to have your flat spots. And that's where it's not going to work. All right, like right here, you would have sold the open of the next bar. So you would have sold right there. If you didn't have room to get your stop to break even, you would have stopped out. Okay. If you have longer leg lengths, then the pullbacks are going to be bigger. So, when you're going down like this, if this is your leg down, your pullback should go to about right here, right? So your pullback's going to go up. And if this happens to get into the overbought at this point right here, there's a good chance it's going to keep going and make a flat spot until it gets to the midpoint right here. And then you enter, and then you short down here for the next long leg down. All right? With a shading difference, I darker blue. There's something else going on in the background. Just ignore that, Craig. Okay, I know what you mean. There was some, like this darker red and all that. Ignore that. Red is red and blue is blue. Okay? There's something else going on in the background. If you take this off, you'll see. I think it's the hours. That's what it is. It's the hours. This darker background is what happens when, overnight, right here. That's the overnight hours. Okay, that's what the difference is. So this is daytime hours, and the darker one's nighttime hours. All right, that's all it is. So you can ignore that color. I'm just going through this as structure is what I'm trying to show you. So what I want you guys to get out of this is, one, if you're going to do it all within a bar, that's great. You got to have your signal to do it all within a bar. All right, and think about this. Right, what I just said is one thing. We have this stuff down here that's giving you the exact signals, and that's good. That's all. I mean, that's great. It's really good stuff, and it gets you the exact signals really well, most of the time. But some of the times it's going to go further. It's going to pull back, and it's going to go further. And what you should think about, and I've been going over this a lot lately in the last couple of weeks, and this goes to setting targets and stops, and actually even your entry. If you have a big leg down like this is the whole leg down, right? This guy right here is your whole leg down. Now your retracement from that leg should be about right here. Okay. Now it's already telling you to buy right now. All right, it's telling you to buy the open of the next bar. So the open of the next bar is right here. So you're already long on that bar. That should make it up to here. Okay. If this bar gives you an up close, that up close is going to be right here. All right. And that is going to bring it out of the oversold. It's going to put you right here. Right. And then the next bar is going to bring you to like right here, and that's going to put it in the overbought. The next one will put you in the overbought. Probably, right? So then you'd be thinking about selling. You'd be thinking about selling at that point because it might give you a white right there telling you to sell the open of the next bar. But this thing is trying to pull back up to here. All right? It's trying to get up to this level, right in here. And so if you do sell the open of that next bar, you're going to have to suck it up while it pulls back to that level. And then it'll probably still work out when it goes down from that level. But what I was suggesting is, if that happens to be the case, then let it go in your favor a little bit before you actually enter. Don't just jump right in at the open of the next bar. Let it give you a better entry because it's trying to give you that better entry. Right? When it's like this and it's trying to get up here and you get an entry right here, let it go to here. So your stop's going to be up here somewhere instead of your stop being right there at that level. Does that make sense? The white bar is conservative or aggressive. The white bar is down here. When you're doing this, anytime you get the white bar, if you enter at the white bar, that is going to be aggressive. All right. It does kind of focus on the background as well. But it's usually going to be pretty aggressive. If you're getting in anytime that it gives you a trigger, that's going to be pretty aggressive. All right. Usually it's going to be aggressive. Okay, wait. The white bar down here, the white bar up here, same thing. So when you get a white bar here that closes at the bottom, it says to buy. White bar here closes at the bottom, it says to buy. White bar here that closes at the bottom, it says to buy. All right. White bar up here that closes at the top, it says to sell. All right. But this is 100 range. Remember, this is 100 range. You're talking about days right here. We're going back to like Monday, I think, right here. To get to your desired entry on that same bar, or do you wait? Does it have to get to your desired entry on that same bar, or do you wait for another bar to see if it gets to the entry? If you can't get in, the question, I think, Dan, the question is, if you don't get in at the open of the bar, do you keep trying to get in at the open of the bar? And what my response to that has always been the same. If you missed the entry at the open of the bar and it has gone enough into profit, in this case here, it kind of throws things off because you're not moving your stop, but it has gone enough into profit where you would have moved your stop to break even, typically, then I would not try to get in the trade. All right. And so you can probably use the same thing in this case. If it's gone, if it's gone enough into profit where you would have, it's kind of tough because from the open you're expecting it to go down 60 ticks and you're giving it 40 ticks pullback. So it's not really the case. If it hasn't gone down, like the trade that we had here, that one trade that triggered here, that did go all the way down. Is that it right there? Yeah, the low of 51. This one bar that we've been working on since I started this meeting. It did go down enough to get to the target, so I would not try to get in again. All right, Dan, I would not try to get in again. If it's gone down enough to get to your target, then I would not try to get in the trade again. Okay. If you missed it and it hasn't gone down to your target and it comes back up and you get in then, then it's still a valid trade. Right? If it hasn't gone to your target, you're using the whole 100 ticks in there. Right? So normally, this is what I say normally, right? If you try to get into a trade and it's on, say, a 15 range bar, you have a 20 tick stop that shows to break even after 8 ticks in profit. If it goes 8 ticks in profit and you do not fill, then skip the trade because it's already done what it should do. All right, so using the same logic in here, if your entry should have been right here, like on that trade there was one chance where we could have entered it after I started talking and after I recognized that it did pull back up to the entry point while I was talking, but now it's gone down to where you would have gotten out with your 60 ticks, right? So now if it goes back up to the entry point, I would not get in. Okay, I know you're not really asking about 100 range bar, but I just answered for both scenarios because right now it's pulling back up to where you would have entered, but you would have already been out of that with your 60 ticks in profit, so you would not enter again. Okay, now the stuff that I do in the room in the morning, the stuff that I do even out of the room, these other range bars, these smaller range bars where I'm not trying to do it within a single bar. All right, like this morning on a 50 range bar, I had a few trades on that. And if it would have gone 20 ticks into profit and I didn't get filled, I would have canceled the order. All right, that did happen to me a couple times on the 19 ranges that I was using today. It did go 10 ticks into profit and I didn't fill, so I canceled the order. It happened to me on gold a bunch of times on the 9 range, where it did go 5 ticks into profit and I didn't fill, so I canceled the order. All right, that's what you do. If it goes to the point where you would have either taken profit or you would have moved your stop to break even, then you missed it. Okay, then you missed it. Let's go back. The last white bar right here, that would have been a buy right here. Wayne, yes. That would have been a buy. But our example, I was just using this bar as an example. If we were selling in here, and this is the S, I don't think we were looking at the S to begin with, were we? Yeah, I guess we were. Were we? Yeah, we were. But the example right here, that we were talking about, this bar right here, because it was going down, if we were to sell right here, that was all our example. All right, now this last bar right here would have given you actually a long trade, so you would have, if I were doing 100 range and I were not trying to get it within a single bar, my stop would have been 125 ticks. All right, so my stop would have been down here somewhere, and I'd still be looking for this to go up right now. But that's not the case, right? That's not what we were talking about. So you're distracting me now, Wayne. Throw me off, Wayne. Wayne's usually the one that keeps me on track. Um, all right. So what time is it right now? 3:40. Man, where does the time go? Well, you still get 25 minutes because I started 5 minutes late. All right. So, can I explain how you can make your bars be red when the background is blue? Exactly like mine. Um, well, if you want yours to be exactly like mine, I'll just save this right here, and I'll copy this. I think it's shared, right? Pretty sure I shared this. Yeah, this is shared. Here. I'll do send to all. There you go. Anybody that wants this with all the drawings that I just put on it, they're still going to be on it. Go to that link that I just put in there and click on the link. It's going to be read only. It'll have the word copy in the upper right hand corner up here. All right. It's got the old, you may have to go in and change the password because when you load it on your desktop, you might have the more recent version. You might have to go in here and change the password to the current password. If you think you didn't get the password, you need to go check your email and check your spam and check your promotions folder because everybody that is active or everybody that is on the trial got the password emailed to them at least twice, some of you 3 times. And if you really didn't get it, if you can't find it after that, just text me. You all have my phone number. You can text me at that number and I will text it right back to you. All right. But you can all take this layout that I'm working with right now if you want to. And when you go back over the video later, you'll have all these drawings that I drew. And it might help you make sense of it all. Okay. All right. So, Masuda, hopefully that helps you with that part of it. Now, the actual bar colors are coming from the TV trades right here. You see, if I shut that off, then you lose some of it. The other bar colors are coming from down here in the TV trades range trigger. Now, I'm not exactly sure what version of the TV trades range trigger this is. So if I click on this and I look right down here, just a couple of lines down, this is just the basic TV trades range trigger that I'm using right here. Okay, it's not the try trigger or anything like that. It's just the basic TV trades range trigger that you all have access to. When you go up here to indicators, you have access to this one. It's not that one. It's this one right here. Okay. All right. So, yeah. Well, that was a lot of what I want to do. I mean, we did more about entry here than we did about targets and stops, but we did talk about targets and stops within a single bar. One of the things that I wanted to go over is I kind of started going over it. I kind of got there and I took a step back to talk about something else. But one of the things that I wanted to go over, and I did go over it a little bit, is what to expect out of a trade. All right. And what to expect out of the market, really, not so much out of a trade, even before you get into the trade. Before before you actually even get into the trade, what to expect out of the market. Now, I always tell you these things all the time, that the market's going down and up and down and up and down and up, and that's because it is. And every time I tell you that, I'm trying to find another way of making you realize how you can take advantage of that. How to simplify your understanding of that so that you can believe it's going to happen and take action on that. Because, you got to be confident. You have to be confident that this is going to work. Right? Sean, did you make it in? Sean didn't make it in yet. Damn. I know he's calling me right now, but I can't answer the phone right now, Sean. You have to be confident that that the market's going to keep doing what it always does. All right, that it's going to go up and it's going to go down. It's going to go up. It's going to go down. Or it's going to go down. It's going to go up. It's going to go down. It's going to go up. And your bit of knowledge, like I even changed this on the other. Let me put that on there. In the other ID that I have for this, I actually changed the properties around on this so that I'm actually only showing the 0 the 50, and the 100. Right, I left something on there. Yeah, this one. Okay, the 0, the 50, and the 100. All right, so that's all I'm showing. That's all I really want to see, are those right there. Now, something is off on this. Prices, levels, text, center, middle, background. It's all good. Let's say okay on this. All right, so the midpoint is what you're focused on. What is what I'm focused on? The midpoint and 100% retracements. All right, so when you get into a situation like we're currently in, let me go to a different market so I'm not here. Okay, when you get into a situation kind of like this, all right, this is the NQ. Let's go to a larger time frame on the NQ. Okay, this is pretty good. So you get into a situation like this one right here, where you have this huge leg down right here, right? This is a huge leg down from here to here. And so you're looking at a retracement of that huge leg down. We're right at that retracement point right here. We're right at 50% retracement. So if you had an opportunity to short, this would be a great spot to short from. Now, I would rather it go up a little bit more, and so your entry point is actually right here. Okay, so your entry point would be right in here. That's what I would rather it do. The way it looks like it's going to do it right now, it looks like it might close down here, which isn't bad. Okay, that's not bad, but this is what you would expect out of this. The market goes, the market does its thing, right? It goes down, and it does a 50% retracement, and then it goes down again. So you would expect this leg length right here to repeat itself, right? You'd expect that guy right there to repeat itself over here. That's exactly what you'd expect, right? That's what you should expect. That's what I expect. But you can work within that. In the world that we work in, when you're scalping, you're doing stuff like I do all the time. This is more like swing trade stuff because it's hours of movement. I mean, you're on 100 range, so it's longer time frame, multiple bars, and you're talking about hours of movement to get back down here. But if you break it down into a smaller time frame, you're talking about the same exact thing. Like, forget that these 100 range bars right now and think of them as 10 range bars, right? You'd be into this is better now that it closed up. So this whole thing just moved up a little bit. The midpoint, it's above the midpoint. So now the down close would be right about here at the midpoint. That would be perfect. But before I just okay, the drawings are sticking with it. I was going to try to pull the price away from the drawing so you could see a little bit better, but a down close on this bar right here would be perfect. Okay, and what I would anticipate, what I was talking about, is working within this distance right here, this price movement. Working within that, you have from here to here, from right here to right here, which is plenty of room to make a lot of money. So you don't have to trade 100 times. You don't have to be in a trade that lasts 5 hours, and you don't have to trade 100 times. You get in here and you could take 2 trades. It's like right here. Now, using that 40 by 60 bracket, where the heck is it? Is that right here? That is right here. I'll do this right now, if it's not too late. The open is right here at 42, so I'm going to try to enter. Oops. This is the NQ. Okay. Let me see. Let me go to the NQ. I might be able to throw that same bracket on the NQ. Here's the NQ. And let me open that up. And I'll throw the same bracket on the NQ. It'll be the 40 by 60 on the NQ. Okay. Oops. Here it is. Okay, so I have the same bracket on the NQ. So I'm just going to throw this trade on right here. All right. The entry point was right here. So this is okay. We're right there. All right. So now I got a 40 by 60 bracket on this. So it's either going to stop me out minus 40 ticks, or it's going to go down and give me 60 ticks in profit. All right. And I'm not going to even consider doing anything about it. All right. The open of this bar right here, it wasn't actually a valid trade, but the open of this bar right here, if it were a valid trade, I think I just stopped out. If it were a valid trade, then the open of that bar right there is where I would have gotten short. I just realized it wasn't a valid trade. But what this should do right here, and it just stopped me out minus 40 ticks. Okay, fortunately I only had 1 contract on. That's good. That's good. If I had 10 contracts on, that would have stung a little more. But what it should do right here is make a move down to here, at least to the swing low. And this is what I do in the morning session when I'm trading live in front of you guys. The first thing that you should expect it to do is get down here to the prior swing low. After it gets to the prior swing low, it should extend down the full leg length, all right? But it doesn't always do it all in one move. Like you have a little hiccup like that, or like this one right here on the leg down. It went down really far. It had one pullback right here, then it went down, had one pullback, then it had a deeper pullback, and then it went down the rest of the way. This one right here, if it were a valid trade, we would have just stopped out on that. Okay, so the fact that this has gone up higher, it brings me to something else that I wanted to talk about, and this is something I've been talking about in the morning session. The fact that it's gone up this high makes me want to let it go even higher. All right, this actually did give a valid trade right here. Right, this one right here gave a valid trade to short the open of the next bar. So the open of the next bar is right there. So using the same 100 tick range thing, I could put that one on right now and feel a little bit more comfortable about it because it's actually a valid short trade. But what I think it's going to do, and this is what I was trying to get to, what I think it's going to do is 100% retracement. So I'd rather it go all the way up here and then short it up there if we had an opportunity to. We're not going to have an opportunity to, but I would rather have it go up there and short it all the way from up there. Okay? That's what I would rather see it do. Because it's gone through the 50% retracement, considerably through the 50% retracement, and you're in no man's land right here. All right, if you want to do the conservative trade when it comes out of the overbought right now, right there would be the conservative trade, selling it right there, right now. But I still think it's going to do 100% retracement and get up here. So what I'm talking about, let's go back here. Let's go back here and here. What I'm talking about is, if you have an opportunity, you get an opportunity like this to get an entry right in here in this spot where I made the circle. Remember, I drew that circle and said that's where you really want to get your entry. But if you get your move and it goes like this, and your 50% retracement is right here, and it goes up here, and you don't get it, and it keeps going, and it's up to here, and finally up here is where you get an indication to go short. That's what just happened there with the other one. Up here is where you get an indication to go short. This is where it's trying to get up to. Right here is where it's trying to get up to. Right? So instead of just going short at the open of this bar, let it pull back some more and try to get short up here so that your stop's going to be above there. Right? Let it pull back a little bit more. So if I go back here to the ES right now, this is where you'd be looking at it, right? You would have been shorting up here. Instead of shorting down here where the indication was, it would have been the open of this bar, I think. Right? The open of this bar. Instead of shorting down there, short up here where your stop's going to be above the prior swing high. Now, I know we don't have a trade set up to support that right now, but if we did have a trade set up that supported that, that's what I would say. Does that make sense? That's what I've been trying to show people. In the smaller time frames, that happens, it happens a lot more than a huge move like this in this big time frame. But what I would look for right now, if it gets up here and it hits this level and you come out of the overbought, that should be an awesome trade. That's what I would look for in this particular case right here. It's not a valid trade in any way. But if I were just going to trade, retracements to certain levels, that's what I'd be looking for. I'd be looking for this 100% retracement at this point. If it hit right here and it gave you a valid trade right here, then you would have taken the short. It probably would have been a short from the open of this bar. Right here is where the short would have been from, the open of that bar. And you had 100 ticks in there, so you would have taken some profit. All right, it didn't turn out to be a valid trade, so we didn't want to do anything. I didn't mean to do anything in there. But if you short in no man's land, then you see that only working out when your bracket is within one range bar, and you're thinking that correctly. If you short in no man's land, right? If you short in no man's land, the question Rico asked, if it's in here somewhere and you're doing the 60 by 40 bracket within a bar, and you have an indication to go short here, then you're looking for it to work out within that bar. All right, you got an indication to go short. It said go short at the open of that bar. And if you did go short at the open of that bar where it said to, the 60-40 bracket thing would have worked. You'd have gotten 66 in profit right there. Okay, so yes, that is correct, Rika. If you shorten in no man's land here. But, in a regular scenario that split stop profit on your ES19 range bar. Okay, what is my bracket, the way that I do it in the morning, or if I were doing a 19 range bar to just get it done in one bar? What do you mean? Okay, if you're just going to get it done in one bar on a 19 range bar, well, why use a 19 range? Use a 20 range, and that way it's going to be easier for you to do. Do like a 6 by 14 or something like that in the 20 range. Okay, I do the 19 range. I do the 19 range because it's easier to figure out where to put the buy stop and sell stop and all that stuff ahead of time. But yeah, it'd be something like that, right? So look what happened here. What I just said. This 100% retracement. Look for the down close off the 100% retracement. Pulls it onto the overbought, and bam! Look, you got a gap down right there. See, that's the market's giving you a whole bunch of little pieces of information, and you just have to see them and understand what they're there for. If you're in no man's land like this right here, where it should have turned down right here, but it didn't, it's trying to get up to this level. If you get a trade indication within that level, you know, and you're trying to do it within a bar, like Rico just said, if you're trying to do it within a bar, then you would have gotten your 60 ticks right there and been done. But if you were trying to do it based upon support and resistance levels and price market action and finding things like that, then once it went through the 50% right here, you would have just waited till it got up to the 100%. Right? That's why I'd set this retracement up so it only has the 50, the 0, the 50, and the 100. Right? So right here, now this is important too. Now this this is another thing that is important, and I've had opportunities to talk about this some more. If you guys looked at that article that I created about the trailing stops in the 3 different types of chop, where you have the bugle chop, you have the triangle chop, and you have the channel chop. All right, so the bugle chop leads into another area. I hate the bugle chop because you don't know where the top of the bottom is, and the bugle chop is undecisive as far as where it's going to be going. Now the triangle chop is also the same way. Let me draw it for you so you can see. I'm running out of time here, but let me draw it for you so you can see. All right, so the best kind of chop, if you're going to be in chop, is going to be channel chop like that, where it's range bound. So you can buy here, sell here, buy here, sell here, buy here, sell here. The next kind of chop is triangle chop. So the top and bottom of the chop are clearly defined, right? So you sell here, and you expect it's going to get down here. You buy here, expect it's going to get up here. You sell there, expect it's going to get there. And it's diminishing, but it's okay. The next kind is the bugle chop, where it's like this, where you don't have a defined top or bottom. All right. So, Mark, you just got to ask me for it. It's out there somewhere on the internet, and I might have stuck it out here on this web page too. Not this web page in here. I might have stuck it in here somewhere. Maybe I didn't. But anyway, just send me an email and I'll send it to you. Okay, if anybody wants that, just send me an email and I'll send it to you. Send it to support@targetviewtrades.com. Just say chop. 3 types of chop or something like that in the subject line. But let's go back here. All right. So the bugle chop is the worst kind of chop as far as trading within it, because you don't know where the top's going to be, you don't know where the bottom's going to be. But the bugle chop usually leads to a trend change. Okay. Now, let me explain that to you. What happens when you're in something like this? Let me go here. Let me find an example of it. Well, this is kind of an example right here, but not quite. And this is kind of an example right here that we just got into, but not quite. Let's use this one. Okay. If all you know about this right now is that you're in this chop right here, right? And then suddenly, price gets up above this level, right? Price jumps up above that level. Oops. This. Price jumps up. Why is it not doing it? There it is. Price jumps up above that level. So now you got higher highs. All right. And you have this down here as you sort of bottom. I didn't mean to actually draw that there. But let's just delete it while I can. You have this is the bottom of your chop, and it broke out the top of the chop. So you're thinking it's going to move up, right? But then it comes right back into the chop, and it gets down to the bottom right here. Now, this right here is exactly what I mean. All right, so it goes down through the bottom of the chop. So now what you have is this. You have higher highs and lower lows. The bugle, right? That's your bugle chop right there. So what this suggests is that you're going to have a trend change in the market. It's going to make a decision. It's going to choose what direction it's going to go in. So because it's broken down to the bottom, you would be looking for a 50% retracement right here. Now earlier, right here when it broke out to the top, you're looking for your 50% retracement down here, coming down for the bounce back up, right? But it went through that. It went through that, and it went through the bottom. So now you're looking for it to pull back up here, right? And bounce down. Pull back up to that midpoint and bounce down. So this is where that all that stuff comes into play. And we're actually dealing with this right now, right at the moment, right now. We're dealing with the same thing in a larger time frame. When we get all the way to the end of, was it here? No, all the way to the end of this on the NQ, I think. Hang on, let me go to the end. Let's go to the end. Okay, you see how it whipped right through here, then it went through the midpoint. So you're not looking for a trade there anymore. It went all the way up here, and it failed, but it failed to keep going down. So that limits your scope to this. All right, because it failed to keep going down, it limits your scope to this right here. This is what you know about the market right now. This is what you have for a trend. You have this little bit and a pullback to the 50% retracement of that trend, right? That's what you know about the market right now. You know this little bit. It went up, it went down, and it should go up. How far should it go? It should go this far, right there. Oops, I didn't draw the line. I was going to draw the line and drag it over. It should go that far. That's what you know about the markets right now. It should go that far from this point. Okay? So it's got to break through here, and it should get up to there. That's where it should go, right there. Right? That's the little bit of information that you have right now that you can use in the market. What was your entry opportunity? When it came out of the oversold or when it went into the oversold, right down here. Either one of those. You could have entered right here at the open of that bar or at the close of that bar. That was your entry opportunity. Do you see that? I know those were a lot of words, but I'm recording all this so you can go back and watch it. And again, you guys, if I save this right now, you can take this and put it on your desktop, right? If I put it down here at the bottom, I paste it in here, and that says send it to the staff. That's not the staff, that's the wrong way. If I click on this, here it is, I can do this. I can paste it in there, and send to all. There you go. That's the link. If you click on that link, and you're on the trial or you're active, you're an active subscriber, it's going to be a read-only copy. Just click on the word copy in the upper right-hand corner, and it'll make it editable for you. Okay, it'll have all the drawing stuff. Oops, even that. Take that out. It'll have all the drawing stuff that I've done. Oh man, why did I do that again? There we go. All the drawing stuff that I've done. Okay, so the stops and targets and the entry. Went over a lot of different things in this meeting. Has this helped any of you? Do you understand any of this? Because what I'm trying to explain to you and trying to show you is that you get the TV trades for your entry. You get a great entry based on the TV trade stuff, like right here. You would have been buying. Oops, hang on. You would have been buying either when it went down into the oversold. You would have been buying at the open of this bar, or if you were being conservative when it came out of the oversold, be buying at the open of the next bar, the close of that bar, the open of the next bar. So right here, what happened here was a great trade opportunity. All right, that was a valid trade opportunity with the signals that we have. The conservative trade and the aggressive trade with the trend. The background is blue, so you're only thinking about buying. You got down into the oversold. That's where you find your precise entry point once it does that. All right. So I wanted to make sure that I covered everything. I know some of you guys have asked me these questions over the past couple of days, and I've been really, really busy, and I've been trying to answer your questions as much as I can, but I wanted you to come to this webinar because I thought I would cover a lot of the stuff here in this webinar for you, and hopefully simplify things for you. And I'm sorry I was 5 minutes late. Look, we're almost at the 1 hour point right now from me being 5 minutes late. The article about the chop, Mark, just send me an email, support@targetviewtrades.com, and I will send you that article. Any of you guys that want that article about the chop. But there was no signal at your last ideal entry. The ideal entry would have been right here, right? There was no signal to go short in there. The background was blue. So there was no signal there to go short. Ideally, if the background was red, that would have been the spot to go. Like right here. This one right here would have been, this is kind of in no man's land right here, right? But in no man's land, the signal was right here, said to sell the open of the next bar. So if we would have sold the open of the next bar, it would have been actually right here, would have been the open of that bar. It went 31 ticks into profit that way, it looks like. Is that one? No, it was this one here. Yeah, it's the bar after that went 31 ticks in that direction. Now it went 31 ticks this way, it went 69 ticks that way, it looks like. It went 31 ticks down, then it went 69 ticks up. That is something else. If you guys don't know, I created this thing over here. So on every single bar, you have how far it went from the open to the top and the open to the bottom of the bar. On every single range bar. Actually, every single bar, even if it's not a range bar. It'll tell you how far it went from the open to the top and open to the bottom. That's what this is. Sell profit is the open to the top, and I'm sorry, buy profit is the open to the top, and sell profit is the open to the bottom. All right, it does that on every single bar now. So if you find yourself going back to check things out and saying how much was it, how far was it from here to there and all that stuff, I created that for you guys so you can do it on every single bar. Okay, it's part of the TV trades. You would have the TV trades indicator on there to see that. Put the TV trades indicator on, click on this right here, and choose data window. If you choose the object tree, it's not going to give you anything useful. All right, choose the data window and it'll be right there. All right, one of the problems you have is that you're not sure what your daily target and loss should be. Is there any thought on that? When you should stop? Well, that's where I started this whole thing off. If you're doing it all within a single bar, Masood, if you were trying to get your goal for the day within a single bar, like on 100 range bar, if you said, okay, I'm going to have a 60-40 split, and I'm going to trade until I have 2 successful trades or 2 stop outs. The total of 2 successful trades or a total of 2 stop outs. That's how long I'm going to trade. And if you have a 60-40 split and you only have to be 50% profitable for that to work long run. Okay, so that's one way that you can deal with that, right? In the beginning, particularly in the beginning. I did start the whole thing out by saying, some of you guys, often, most of you guys have asked me, when should I stop? If I'm losing, when should I stop? When should I quit trading and say, okay, it's just not working for me today? That is one simple way to do it. If you're doing it within a bar like that, you say, okay, I'm going to stop if I have a max of 2 stop outs. And I'm going to stop if I have a max of 2 wins. And if you're 60-40 split on that and you have a max of 2 wins, well then every time you stop with 2 wins, you're now up 120 ticks. And every time you stop with 2 stop outs, you're only down 80. So, if you have 2 days in a row of stop outs and 2 days in a row of wins, then you're still up considerably after that. Right, and the idea is to actually have more wins than stops anyway. Most of the time you will. Okay. Alright, that's funny. It came all the way back to the very beginning of the meeting. That was your last question. Alright. It has been an hour now, guys, and there's a whole bunch of information that I put into this meeting, so if you want me to stop now, I will. If you want me to stop the recording now, I will. Yeah, I think I'll just stop the recording right now.